Hey guys, this is Nick from forexnoobs.com. In this video, I'm going to be taking a look at a failed trade from last week. Before I get into this video, I just wanted to ask, if you enjoy this video, please take a moment of your time, just a few seconds, to hit the thumbs up button. If you're watching this on YouTube, the thumbs up button will be to the bottom left. If you're watching this on my site, on the blog, the thumbs up button will be to the top right. If you're not watching this on the blog, you should probably go to the blog post, which is linked to below, because on the blog post, I have written a bit of extra information about this video and about a few of the things that are going to be discussed in this video. Anyway, let's get started. In this video, I'm going to be discussing a failed trade that a few people in the forum took last week. I personally didn't take this trade, and there were several reasons why I didn't take this trade. I considered it too risky. In this video, I'm going to show you the warning signs that kept me out of this trade. Now, one thing I want to make clear, on the forum, everyone is free to make their own choice as to whether they should enter a posted trade. I tend to be a very cautious trader. Some of the other traders tend to be more open to risk. In this case, my caution protected me from a losing trade. It's up to you whether you want to be a cautious trader or a risk taker. There is no wrong or right way in this case. As long as you follow your money management plan and your trading plan, you should be fine. Being a cautious trader like me means you'll only take about 2 to 3 trades per week. A trader that is more open to taking riskier trades may take 5 to 6 trades per week, or maybe even more. The difference is my win rate is higher because the 2 to 3 trades I take are low risk setups, and they're those perfect setups. Whereas the trader taking 5 to 6 trades per week is going to lose more trades, but they're going to be taking more trades, so potentially they're going to make more pips by the end of the week. So it's really up to you how you decide to implement the strategy. You can take all of the trades, or you can take just the perfect setups. It's up to you. So the trade we're looking at in this video was not a bad trade in the sense that it shouldn't have been entered. It was just a risky trade. And the fact that it was risky kept me out, but it didn't keep everyone out. Okay, so you're looking at a GBP AUD 8-hour chart. I'm going to be replaying this trade, and I'm going to talk you through my thought process as it formed. If you haven't watched my last few trading videos, what I'm doing here is I've taken the chart back to the 25th of August, and I'm going to replay this trade as it unfolded. It's going to be replaying at a rate of 1 hour every second. So it's not going to be replaying as if it were live. It's going to be a little bit faster. So anyway, let's get started. Okay, so as we see right now, price is slowly falling from this resistance area up here. So we have this resistance area up here, nice strong resistance area. We know there are sellers grouped here. There was in fact a trade here on the 6-hour chart. Not really visible here on the 8-hour chart, but on the 4-hour and 6-hour, there was a short trade here that worked out quite well. But I didn't take that trade. I actually haven't taken many trades in the past 2 weeks. My mum has been over from Italy on holiday. It's the first time I've seen her in a few years, so I haven't really been trading. And actually, there's an important thing about that. I wanted to share a failed trade that I took in the last few weeks, but I haven't taken any failed trades in the last few weeks. That's not because, I'm some amazing trader who never takes a failed trade. It's just because I've only taken about 2 or 3 trades in the past few weeks, and they all ended up being profitable. Because I haven't really had much time to trade, because I've been showing my mum Edinburgh and stuff like that, and I've been going out a lot, and I haven't really been home to trade, and I haven't really been wanting to trade. It's the summer holidays, so I'm just taking a little bit of time off from trading, taking only very, very few trades. So that's why I'm sharing a failed trade that other people in the course took and not me. But still, there's a lot to be learned from this trade. So anyway, let's keep going. Okay, so now we see sellers heading into an area of support, and I'm going to pause this here. Okay, so this is an area of support. If you're familiar with my free strategy, which is linked to below, you know that we expect there to be buyers at this area of support. A support area is an area where there are buyers. We've seen proof that there are buyers here, and also before this point here. And now we're expecting buyers to possibly counter the sellers as sellers move into this area. Now we're already seeing signs of buyers countering sellers. We got this first candle here. This is a very strong preceding trend. It's a very strong bearish candle. It indicates sellers are in complete control of price. Then the candle after it, what does this candle show us? It's much, much, much smaller. It's what, 1/5 of the size of the previous candle? So this already indicates that sellers are running out of steam. As soon as sellers get close to this support area, to an area where there are buyers, they start running out of steam. They start slowing down. And this is usually what we look for when we're going to enter a trade. We look for sellers to come into an area of support, then we look for them to kind of run out of steam, indecision to form, and then we can take a trade. Indecision hasn't formed yet, but it looks like it's about to form. All right, so price ended up pushing down quite a bit further. But, that's not a bad thing. I mean, as long as price doesn't push down too far, this support area is still holding, and there's still a chance that buyers are going to enter and price might reverse it. So let's keep playing. Okay. Actually, there we go. Okay. So this is a trade setup. This is a pretty decent trade setup when you first look at it. We have a strong bearish preceding trend. So sellers are in control of price starting from this candle, and this candle. Sellers are in control of price. They hit this support area, an area in which we know there are buyers grouped. We know there are buyers grouped here. They hit the support area, and all of a sudden, buyers start to counter the sellers. We start to see clear signs of indecision. This candle in particular has a small body, long lower wick, kind of, I guess, a bit too long upper wick. But this candle clearly indicates that there's a tight struggle between buyers and sellers. No one has clearly won yet, but there is a struggle between buyers and sellers. And when I see a candle like this is where I see a potential trade. Because if buyers are able to break the high of this indecision candle, then that suggests to me that buyers are in control of price and that they could continue to push price up. So what I would normally do in a case like this is set my entry above the high of the indecision candle, look for a stop loss, and that's where the problem comes in. That's part of the reason why I didn't take this trade. The risk reward ratio just wasn't worth it. So let's look at the stop loss. Let's look at where I would potentially place a stop loss. Ideally, when I place a stop loss, I want to place it below the low of the indecision candle. But in this case, that would just be way too big a stop loss. I mean, the entry would be at the high of the indecision candle. So let's just call it 177.78. The stop loss, if I'm placing it at the low of the indecision candle, would be 177.27. So that's a 60 pip stop loss. That's just way too big for an 8-hour GBP/AUD trade. Sometimes if the stop loss is too big, placing it at the low of the indecision candle, I'm happy to place it below the support area, because this support area, it's an area in which there are buyers grouped. There are buyers grouped here, so it's going to be hard for sellers to break through the support area if buyers are strong. And if buyers manage to break the high of the indecision candle, that indicates that buyers are strong. So it's going to be quite tough for sellers to regain control of price and push down below the support area. So in this case, if I were taking this trade, I would have placed my stop loss below the low support area because it would have been a tighter stop. So the stop loss would have been around about 177.42 with an entry at 177.77 or 78. So it would have been roughly 36 pip stop loss. Still quite a big stop loss. And, that's why I didn't take this trade, because the stop loss was big, but that wasn't the only reason. Now, this is the important part, and you really, really should remember this in your trading, because this is what saves me from failed trades. Whenever you plan to enter a trade, simply look to the left. All you have to do is look to the left. So this is where the setup is, specifically here. You look to the left a bit. Now, if we look to the left, this area here, what do we see? We see minor support resistance. We see when sellers were pushing down here, they got stuck around this area. So we had this strong move by sellers, and it got stuck right here. Indecision formed here. Then price went back up, all the way back up to here. Then it came back down, and again, price gets stuck here, indecision here. pushes back down, then comes back up. So this whole area here, it suggests that when sellers or buyers push into this area, they tend to struggle. I mean, it suggests that there's minor support resistance here. At the very least, there's minor support resistance here. And what I don't want to happen is when buyers push through my entry, I don't want them to get stuck in this same area that sellers got stuck when they came down. So that minor support resistance is what kept me out of this trade. Now, sometimes minor support resistance is going to be a bit higher. If the minor support resistance was up here, then it would be fine because I would just set my first target at minor support resistance, and then I'd have a good risk reward ratio. My stop loss would be 35 pips. My first target at minor support resistance would be 40 pips. That would be fine because my first target has a risk reward ratio of 1-to-1 or better. And then my second target is a risk reward ratio of 1-to-2 or something. So minor support resistance is what kept me out of this trade. The minor support resistance was right here. And if you look at that, that is roughly 177.78, 20 pips from entry. So minor support resistance, 20 pips from entry. The first place in which this trade is probably going to stumble or going to get stuck for a while is only 20 pips away from my entry. And my stop loss is 36 pips away from my entry. So, that risk reward ratio there, it's not that good because usually I'm setting my first target at the minor support resistance. If my first target is 20 pips, stop loss 36 pips, there's no way I would be in that trade. Now, the people who did enter this trade, they ignored that minor support resistance. They thought that this wasn't significant enough to warrant staying out of this trade. And, that's fine. It's up to you whether you decide to take note of the minor support resistance and how you decide to trade the strategy. Personally, I didn't enter because of that minor support resistance. Some people did. The trade never actually hit the minor support resistance. It did trigger, as you can see here. It barely triggered by just a few pips, but it did trigger and then it just came back down. So I stayed out of this trade because of the minor support resistance, and it kind of saved me in this case. Now, I'm not going to say that the trade didn't work out because of the minor support resistance. It could have been, because the minor support resistance kind of stretches all the way from here to here. So it could have been that, but it could have also been that it just was a failed trade. Who knows? But the point is that I stayed out of this trade because of the minor support resistance. Some people entered because they chose to ignore the minor support resistance. But is that minor support resistance valid? Well, let's skip forward to right now. There we go. So what is happening right now? Okay, my minor support resistance was here. This is why I didn't enter the trade. And look what's happening right now this week. Price opened here, came up, hit minor support resistance, bounced away. Then price came back up. It closed right on top of that minor support resistance. And now it's stuck on it. It looks like it wants to bounce away. We're not quite sure. It could continue up through it. But the point is that this minor support resistance is in fact valid. So my concern for this trade was in fact valid. We can see price this week being held up right in this area. And that's why I didn't enter this trade. Now, this is something you should really take note of whenever you enter a trade. Even if you're not using my strategy, even if you're using another strategy, just take a quick look to the left and see where your trade can be held up. If you just take a look at this, you can see that this trade could possibly be held up here. And this week, we can see that it is in fact being held up there. As price moves through that area, it's being held up there. Just look to the left. That's something you should always have in your head. When you're looking at a trade, you're looking to enter potential setup, just remember in your head, look to the left. Look to the left for places in which your trade could possibly stall, could possibly get stuck. If that place is too close to your entry, you may want to reconsider that trade. If that place is far away from your entry, or, not necessarily far away, but it's further away than your stop is, then you may want to set your first target there. You may want to watch out when price reaches that level. I'm not saying that you have to use minor support resistance in the exact same way I'm using it. I'm just saying when you notice minor support resistance, take note of it, and you should know that your trade may potentially get stuck there. You should know to watch out for that area. If you see signs of your trade getting stuck in that area, you may want to close out part of your position, move your stop loss to break even, or, do whatever you do to manage your trades. Just look to the left, check out what's there. If there's something in the way, then trade accordingly. Now, one final thing I wanted to talk about, like I said, I've been wanting to do videos on failed trades that I've actually taken. I haven't taken any failed trades in the past few weeks because I haven't really been trading that much, but I'm going to be trading full time from now until the end of the year. From here on out, at least for the next few weeks, every single failed trade I take, I'm going to do a video like this on. And I want to do this because you learn a lot more from failed trades than you do from winning trades. I've been showing you some of my winning trades, but now I want to show you some of my failed trades because you learn a lot more from them. And I want to show you guys that I actually still make mistakes. I've been trading for 10 years now, and I still make mistakes. I still screw up trades because of stupid decisions. It doesn't happen that often, but it happens. And I want to show you guys that. I don't want to show you guys just failed trades that failed because they didn't work out, because that happens, I want to show you some trades where I made mistakes on. And again, I'm going to remind you, if you enjoyed this video, if you found it useful, hit the thumbs up button. It's either going to be to the bottom left or the top right if you're watching it on my blog. And if you have any questions about this, just leave a comment on the blog. Please don't leave your questions on the YouTube video because I don't tend to respond on the YouTube comment section. Just head over to the blog and leave your comment there and I'll respond. I try to respond to every single comment. Anyway, thank you for watching. Hope you enjoyed this video. See you around the site.